Good morning. Welcome to One Financial Markets morning commentary. I'm Andrew Johnston, Chief Dealer at One Financial Markets. And today, once again, we're going to go over what happened yesterday and what we're looking forward to the rest of today. So yesterday, we had IFO release. Just looking at the chart on the screen, and as we said yesterday, if it was a higher figure than 114.9, around the 116 level, we would look for some appreciation in the euro dollar. And if you look at this chart here, bang on the time, IFO released, came out 116. We were trading about 116.46 before that, and euro dollar had a nice little pop up to 116.65, and then retraced, funnily enough. And then we held in this sort of pattern for the rest of the day until, interesting enough, around about 12 o'clock, euro started to make a bit of a move. We were trading exactly the same as we were just after the IFO release, 50s, and then we had a nice little pop up to 117, 117.10. Now, what we have to understand here is why this move was made. Now, IFO was decent, but in terms of normal trading patterns, midday until the US session, US opens, which is 2:30, is generally quite quiet, not much going on. So we need to find some sort of relationship or pattern to why euro would be going up when there was no real data out. Data had been good, but really nothing on the release side. And what we could find that there is a pattern with is if you look at the 10-year government bond in Germany. Now, the 10-year government bond in Germany, at that time, between 12 and 2, sold off quite aggressively. You can see in this region here on the screen. Now, when a bond sells off, its yield goes up. Why do people own bonds? People own government bonds for times when they're not really sure about the market, they're risk averse. What happens when you sell bonds means that you think the market's going to be turning around, it's going to be a bit more, it's going to be better, it's going to be healthier. So when a bond is sold and the yield goes up, yield going up means the currency of which that bond is held in also goes up as well. So in this case, euro bonds sold off, euro goes up. It's just basically an indicator in terms of the health, once again, of the economy, how it's doing. So a rising yield is a rising euro. And this is basically, I can put this down to the movement in euro dollar at that time. And also when you have euro dollar move like this, which were, it was ongoing for 2 hours, but it was a decent move of around 60 pips. What you're going to have is short-term traders start to get stopped out because they're only in there for like 5, 10, 15 pips. And then that pushes the move higher and higher and higher. Now, the momentum got lost at 117. I think a lot of traders are thinking maybe now, as long as we settled above 117, we'd be looking at about 120. But we've retraced because guess what? It's Fed day today. So all of the gains were given up, and this morning once again gains are dropping even further. We've settled at 116.50 this morning, and in the last 25 minutes, we've dropped off another 25 to 30 pips. So this looks like boot squaring going back into the Fed. People taking profits, and I imagine this pattern to hold for the rest of the day, basically. We've had a rally. Cable also had sterling, that is, GBP USD, had a good, decent up move yesterday. And it's retraced as well. So basically, what we're looking forward to today is the data releases. While all this, we call it noise when the market doesn't really find an equilibrium or a direction. And that's more to say it. So what we're looking at today, big data releases today, as discussed yesterday, the Fed. But before that, at 9:30 is UK GDP. And what is GDP? GDP is gross domestic product, but for all of us out there, for ease, it is the most important figure or economic statistic that can be released on a country to capture a country's health, if you want, quarter on quarter or year on year. Now, we always look at the quarter on quarter figure because that gives us an understanding of how well the country is doing, progressing over four periods during the year rather than over a year itself. Now, it quite simply measures the economy, whether it's growing in a negative or a positive format. Now, what is expected today is 0.3, which is a 0.1 increase on the prior. Now, if this happens, I have the Sterling chart up here. We're looking to continue this uptrend which we're in at the moment. 0.1 growth or 0.1 increase in GDP is not a hell of a lot, to be honest. It's not a lot to applaud about, but it is an increase if it comes out. Now, if it does not come out as an increase and it comes down as a decrease, as 0.1, that will be seen very bad by the market. And if we have, in the next quarter, when we have the release of GDP, if that is also a downtick, so if let's say this one comes out as 0.1 and then the next quarter it comes out as 0, as in no growth or no growth at all, effectively, then that's seen as a contraction and it means the economy is in recession. Now, possibilities of this happen, yeah, you know, potentially. However, at the moment, with the Brexit, etc., and just looking at the technicals, cable looks like to be in a really an uptrend period at the moment. If we just zoom back out here, if you see a look at the post-Brexit range there, it looks like, if you're looking at cable now, we're looking to settle in that sort of range and looking for the higher echelons of 134.50, but basically for the end of the year to be trading in 129, 134 range. It looks like that's where it's trying to settle now, but we do have GDP data today and we have to take that into consideration, albeit I don't think it'll be a very lackluster number, and if anything really happens on it, I very, very much doubt it. And once again, once that's gone, we do have some US data, new home sales in the afternoon. I don't really see that to be a market mover in any way. People are waiting for the Fed tonight at 7 o'clock and the statement. There will be no hike today, I believe, but we will be looking for comments in the statements alluding to when the next hike will be, which will probably be September or October, and how they're going to be dealing with their balance sheet, and how someone starts refinancing or restructuring their balance sheet as a government. I don't know where you start. It's a very, very big deal. But we look to the comments tonight and the statement, and then we'll have some more direction on the market. Of one note, the Dow did make a new high yesterday, S&P new high yesterday, but was very abruptly stopped, as I think people do P&L, and the Trump factor again, no one knows what that guy's doing. So have a good trading day, and I'll see you back in the front lines tomorrow.